Thanks, Chrissy, and thanks to Vertical Events. Great to be back in Sydney. It was actually 3 years ago at this conference that we purchased the Banfield nickel mine. It's a previously operating nickel mine in northern Vietnam. The previous owners sunk $136 million into the capital infrastructure, and we're looking to turn the mine back on, but we're going to build a downstream nickel refinery and a refining business to produce chemical products for the lithium-ion battery industry. Just a quick corporate snapshot. Well positioned with cash at the end of the quarter, $49 million. We've also made some strategic investments that have gone very well, thanks to a stock called NICO, NC1. Our listed investments are now worth $30 million. Got some good liquidity in the stock, so plenty of volume if you want to get in and out. Some very supportive shareholders. The top 20 holds around 60% of the company. Deutsche Balaton, very supportive out of Germany. Fidelity, one of the largest institutions in the world, great to have them on board. And EcoPro is the largest cathode manufacturer in the world as a strategic partner. You can see there we're working with the Korean Development Bank and Bernvois, the local team here in Sydney, Bernvois Corporate Finance and the Korean Development Bank on our debt advisory. The board is made up of a number of mining executives, and also Alison Gaines is a corporate governance expert, and then we've also got Mr. Jung, who's the finance, he's the representative from EcoPro. So we're trying to build a vertically integrated business here. It is based on partnerships. We have very strong relationships in South Korea and also now in Vietnam. We are looking to produce the first stage of the lithium-ion battery, which is a NCM 811 precursor. So it has a nickel, cobalt, manganese in the ratio of 811 in a chemical product, which is in high demand for the lithium-ion battery industry. We're doing that with a globally significant nickel resource and reserve. We have around 500,000 tonnes or 500,000 tonnes of nickel in resource and 210,000 tonnes of nickel in reserve. So that mine at the Banfield nickel mine underpins the feedstock into our downstream nickel business. Everyone's seen these sorts of charts. I think the key one to look at is down the bottom right. You can see as an industry we need to find 1.9 million tonnes per annum, which is twice the current supply of Class 1 nickel is required to be found, discovered and developed by 2030. It's a major challenge as an industry. So unfortunately there just isn't going to be enough nickel, but we're going to do our best to play a really big part in that movement. So this is where we're located in the northern Vietnam region, out in Son La. The Son La province has the two large hydro power plants. So you can see the hydro at Son La and then also another hydro dam at Hua Bin. So two of the largest hydroelectric power plants in Southeast Asia, right on our doorstep. Well located with a local Vietnamese electric vehicle company called VinFast are building electric vehicles down at the port city of Haiphong, and we have rail infrastructure that goes down to that port city, and we're looking at integrating with that electric vehicle company so that the nickel from our mine will go all the way through to an electric vehicle in northern Vietnam. And what distinguishes us from a lot of our peers is that we will produce the cleanest and greenest nickel in the market. The reason we can do that is because of that renewable power, the vertically integrated nature of our business, keeping it all in country in Vietnam, using a pressure oxidation hydrometallurgic technology, which is much cleaner than the pyromet which is used in the stainless steel industry. We will be using electric fleet, so a full mining electric fleet. So we're moving towards a net zero carbon outcome from day one, and a lot of our peers are chasing net zero carbon in decades to come. We will be doing it from day one. This is a snapshot of our business. We have the upstream business unit where we have the Banfield nickel mine, and that's also where we're taking some strategic investments in other nickel miners. The idea being is that 50% of the feed will come from our mine in Vietnam into the downstream business, and 50% will come from third-party feed providers from areas like Australia, Canada, South America and Africa. We'll bring nickel concentrate into Vietnam, we'll upgrade it into the NCM 811 precursor product. We'll do that with our downstream partners. You can see there that we haven't finalised the partnership model, but we're hoping to be able to come to the market very soon with an idea or to give the market some more clarity around what our partnership model looks like. This is the nickel sulfide district. A number of targets that we've drilled out. We now have 4 or 5 resources, multiple open pit and underground opportunities. It's a large-scale nickel sulfide district, very similar to Jinchuan in China and Norilsk in Russia. So we're in the right rocks, and we're continuing to find nickel sulfide. This was our first ore body that we drilled out, and majority of our tonnes will come from the Banfield disseminated ore body. It's a large-scale open pit. We're looking at an 8 million tonne per annum concentrator. So this is a large-scale open pit, 3-to-1 strip ratio. It's a bulk open pit operation. You can see the grades from a nickel equivalent are around 0.44, which is very similar to the Mount Keith nickel mine in Western Australia, which has been one of the more successful nickel mines for BHP. We also have byproduct credits in copper, cobalt, and the full suite of platinum group metals, including rhodium. This is a new target we're working on with the Vietnamese government. It's 10 to 15 times larger than Banfield. Banfield will be 10 years of mining. This target is 10 to 15 times the size. So we're pretty excited to put a hole into Chimban in the coming weeks. This was from our recent pre-feasibility study. This is the vertically integrated upstream and downstream. A post-tax NPV of $2 billion and a base case $20,000 per tonne nickel price, which is much lower than today's prices. Internal rate of return of 47%, so very strong economics. Big capex there, 854. I wouldn't be too worried about that because the partners that we're bringing in, that's a small amount of money for them. So we will share that capex with our downstream partners. So you can see here the feed profile is very consistent, around 18,000 tonnes per annum of nickel coming from that big Banfield nickel mine open pit. 50% of the feed into our downstream will come from that mine and 50% from our third-party feed providers, working very closely with groups like Trafigura, one of the largest nickel traders in the world. You can see when we did the study, which was recently, the spot NPV was $3.6 billion, a payback of 1.3 years. This is our flow sheet. There's nothing novel about this. This is tried and tested technology used all through the mining industry since the 1960s. Pressure oxidation combined with solvent extraction, and the back end is where we bring in our partners to produce that NCM 811 product. We have some byproducts in copper cathode. The leach residue is where the precious metals or the platinum group metals will report to, and we'll do further leaching. Kieserite is another byproduct, which is a fertiliser product. There's some snapshots of what's happening on site at the moment. We've got a small underground bulk sample. So I was there recently. That all looks in good order. And we've turned on the existing concentrator. So we're producing concentrate. We've shipped that to the ALS laboratories in Perth, and we're putting that through the downstream pressure oxidation process, and we're piloting as we speak. We're also looking at a second phase of piloting in Vietnam later in the year. Our downstream business is built on this chart. We can purchase nickel concentrate at arm's length from our mine and other third-party mines for around 75 to 80% of the nickel price. So a discount to the LME nickel price. We convert it into this chemical product which is in high demand. That trades at 120 to 140% payability or a 20 to 40% premium to the LME nickel price. So effectively doubling the value of the nickel by combining it with cobalt and manganese in this 8:1 ratio and selling it at a significant premium. So it's a very lucrative business, and it's built on those relationships that we've built with the South Korean battery makers. So you can see that price has traded between the 20 and 40% premium. It currently sits around 30%. We use 20% as a base case to drive that $2 billion NPV, but it's very consistently trading at a significant premium to the LME nickel price. So you can see that the sensitivities around the economics are driven by that NCM premium. If the premium was to go to zero, we would still have an NPV positive project. We don't believe that the premium will ever go to zero, but it's worth noting that, there is still an NPV positive at a 0% premium. The other swing factors are the nickel price and the payability on nickel concentrate. So you can see on this chart, if we were to pay 5 or 10% above the market rate for nickel concentrate and use a conservative premium of 20%, we're still driving a $1.8 to $1.6 billion NPV. So we can go in the market and compete with the majors who have tired and dirty infrastructure. These groups have infrastructure that is set up for the stainless steel industry. We have the opportunity to build a clean and green downstream processing facility that is suited for the chemical industry. We will go in the market, we'll pay above the market rate that the stainless steel producers are paying, and that's why we're confident we will be able to secure the feedstock for our downstream business. So there's a lot of work to be done. You can see there the next 2 or 3 years is very busy. We're in the definitive feasibility study phase and pilot plant phase. Within the next 12 months, we're looking to a final investment decision, and then we start building. My background as a mining engineer, this is what I grew up on, and I'm really excited to be at this really exciting part of that growth phase of this business. Looking to be able to produce downstream nickel products in 2025. So you can see here some big milestones over the next 12 months. We're currently trading at a significant discount to that $2 billion MPV. As we tick off these milestones, we will trade closer to that MPV, and that's completing the definitive feasibility study, the pilot plant phase, so de-risking this project from a technical perspective, de-risking the project from a financing perspective with these partnerships that we're bringing in, also showing the market exactly what our third-party feedstocks look like, the groups that we're talking to, groups like Trafigura and other nickel miners, bringing in those feedstocks, and then moving towards a final investment decision within the next 12 months. Thank you very much.